I'm Aron Liron, and this is PwC's Tax Insights in Brief. The California Franchise Tax Board published a formal notice of proposed rulemaking for changes to Regulation 25136-2. The revised version of this regulation, which has been in effect since 2016, has provisions specific to asset managers requiring a look-through sales factor sourcing approach to the location of investors for the sourcing of management fees. Since 2010, California has had an economic factor-based nexus provision. If you had greater than 500,000 in sales receipts sourced to California, you had a filing requirement. With the lack of guidance on what constituted sales sourcing for asset managers, you had many out-of-state asset managers take the position that sales should be sourced to the location of the fund rather than the location of the beneficial owner. As a result of this regulation going final, it'd be hard to sustain that position on audit. As such, taxpayers going forward are going to have to use this new look-through approach. The revised rules will be effective for all tax years beginning on or after January 1st, 2024. However, we should note that for prior years, the FTB's position is that the look-through approach still applies, even though there was no formal guidance in place. What this practically means is that from a penalty protection perspective, it'd be very difficult to get out of penalties January 1st, 2024 forward. This is a rule change that companies are going to have to consider when filing their 2024 extensions, making estimated and withholding and composite tax payments. This is something that should be discussed with partners about potential individual filing obligations and estimated payments as well as the pass-through entity tax for 2025 if they want to consider that. For more details, please read the attached insight. Thanks for watching. This has been a PwC Tax Insight in Brief.